Secret product loopholes dealers won't tell you, reporting thresholds revealed. No new law in 2025 to 2026 suddenly made private ownership of gold or silver reportable. Instead, a set of regulatory and reporting changes, including provisions in a 2025 omnibus bill, altered some reporting thresholds and administrative rules, which combined with misinformation to create widespread confusion. Key reporting rules and thresholds. Form 8300, cash reporting, applies to cash and cash equivalents when total payments in a single or related transaction exceed $10,000. Cash means Federal Reserve notes, U.S. coins, cashier apostrophe checks under 10,000. Cash means Federal Reserve notes, U.S. coins, cashier's checks under 10,000. Cash means Federal Reserve notes, U.S. coins, cashier apostrophe checks under 10,000, money orders under 10,000, and traveler's checks under 10,000, and traveler's checks under 10,000, and traveler's checks under 10,000. Payment by personal check, wire, credit card, or payment app generally does not trigger Form 8300. Form 1099-B, sales reporting. Brokers/dealers must report certain sales of precious metals. Reporting depends on product form, purity, and quantity rather than dollar amount alone. For example, silver bars/rounds of 0.999 fineness become reportable when aggregated quantity meets or exceeds 1,000 troy ounces. Gold bars/rounds of 0.995 fineness become reportable at or above 1 kilogram, 32.15 troy ounces. Certain coins, e.g., some 1-ounce sovereign bullion coins and 90% U.S. silver coins, have specific reportable thresholds, 90% U.S. silver coins reportable when aggregate face value exceeds $1,000. American Eagle coins, gold and silver, are exempt from 1099-B reporting regardless of quantity. Payment network and geographic rules. Separate rules govern third-party network reporting, Form 1099-K, and targeted geographic reporting. Those thresholds and scopes remain distinct from precious metals rules. Regulatory timing. Miscellaneous income 1099 thresholds were raised, from 600 to 600 to 600 to 2,000, effective January 1, 2026. Some FinCEN proposals cited lower record-keeping figures but have later effective dates or narrower scopes. Tax consequences and compliance obligations. Precious metals held for investment are treated as collectibles for tax purposes. Long-term capital gains on collectibles are taxed at a maximum rate of 28%, not the lower standard long-term capital gains rates. Short-term gains are taxed at ordinary income rates. Investors must report all realized gains on their tax returns regardless of whether a dealer issues a 1099-B. Absence of dealer reporting does not remove the investor's filing obligation. Form 8949 and Schedule D typically apply. Wash sale rules that disallow losses for securities do not apply to physical precious metals. Tax loss harvesting strategies are available for physical metal positions under existing code provisions. Dealer regulatory environment. Precious metals dealers are defined as financial institutions under Bank Secrecy Act/related rules and are required to maintain anti-money laundering programs and transaction records. Regulatory access and expectations have been expanding incrementally under post-2020 rulemaking. Practical actions for investors. Choose product types with known reporting profiles if that matters for privacy or compliance, e.g., American Eagles are treated as exempt for 1099-B reporting. Prefer non-cash payment methods when avoiding Form 8300 triggers is important, but remain aware of other reporting channels. Keep meticulous records of purchases, dates, quantities, product types, purities, dealer information, and prices, to establish accurate cost basis. Account for collectible tax treatment when planning holding periods and estimating tax liabilities. Consult a qualified tax professional or CPA for transaction-specific guidance and compliance planning. Bottom line, reporting and tax obligations for precious metals in 2026 are driven by a mix of product-specific reporting rules, the cash transaction rule for Form 8300, and long-standing tax classifications, collectibles. Recent legislative and administrative changes adjusted some thresholds and reporting mechanics, but did not create a new broad registration or ownership reporting requirement for private metal holdings.